sure I do that. Okay. But like I was saying, yeah, hopefully. Okay, just want to make sure the recording was going. I forgot. But it is a preference thing, like you said. So you mentioned here, but I guess that's what part of. I don't use BE with a 1 to 3 RR and 27% win rate. I guess that's what part and partial. If I don't use BE with a 3R. So I guess I'm just trying to interpret that last sentence a little bit more, but I guess you're saying 27% win rate makes you profitable without BE and 1 to 3R, which is correct, obviously. I think the two advantages to break even is number one, that psychological barrier you talked about, where having to tank a shit ton of losses, it's unfortunate, and it can be tough mentally, and that does push people to fall off of their trading plan a bit, especially from a psychological standpoint. So it's not all data and metrics. It is consistency and psychology related as well. Because if you have a trading plan that is all data and metrics, but then you get to a live market and having to tank a bunch of losses or losing streaks, it forces people or even pushes people to trade off of their plan and make it less consistent. So I think that's one big part to break even, beyond the data and metric standpoint. But overall, I personally like it because you're mitigating some losses and you're, minimizing those losing streaks by taking a break even instead of a loss. And even for me, on a lot of my setups, I've been tracking it this year. Nothing too significant from a data metric. Obviously, I don't have that many trades. I took a vacation in April, took another vacation mid-May here. So, not too many trades for me this year overall. But, there's a slight difference between the RR I would have made with or without break even. I would have made 5% less, or sorry, 10% less because I used 2% risk versus with break even, or sorry, without break even. So I've kind of been tracking that just to kind of keep the metric going. And it's honestly not a hard column to track. But like I said, I do think it reaches a little bit beyond just data and metrics. And now that I look at it, I actually forgot to log 2 of these, so we'll go check those out. That's AUD CAD, which was this trade here. For some reason, my computer's really slow today too. I just restarted, like I'm frozen right now, which is very odd. My computer's never this slow. But okay, so this one would have been a -1 without the break even, so I'll toss that in there. And then it looks like NZD Chef is another option here, which also would have been a -1 without the break even. So it's actually a little bit more regarding the percent difference that I mentioned up here. But you can kind of see it's something that I prefer, and I feel like it works very well for my personal style. For those of you that are very, very aggressive and just focusing on a lot of trades and a lot of repetitions, and especially for those of you that are in prop firm evaluations where I think that works better, it's kind of up to you. And I do think personally it saves me from these deep, deep losing streaks. Like you would see, what is this, 6 losses in a row, 7 losses in a row, I think, or yeah, 7 losses in a row. If I were not using the break-even rule, and I think those periods of time is where the preference comes into play. Mentally, if it was tough for someone to withstand 7 losses in a row, which, obviously there's a lot of psychology involved there, and it forces someone to take less trades or try to start looking for these quote-unquote A-plus setups that we talk about you should not be doing, then I think it's better off to use something like a break-even rule. Now, let me see. So Roshan mentioned EJ, UJ both hit stop loss. We'll take a look at those two. Let's see here. Euro JPY. So, did you take the larger scale? This is really odd. My computer is never this slow. I even turned it off for the whole week I was away, so maybe that's why I just turned it on. EJ, we'll toss it up here for a second just so we can keep track, and then UJ as well. So I'm assuming you're talking about these two trades here, these larger scale long positions. If not, and it's one of these, very aggressive short positions, let me know. But to be honest with you, there's nothing here that I would really consider a bad position. It's definitely a bit of a larger range, but yeah, I mean, nothing I would be concerned about. We see the sweep on liquidity, we see the break of structure, we have plenty of fair value. Price even kind of taps in. I think you may have gotten a break even here. I'm not quite sure. If not, then, and due to slippage or spread or whatever it may have been, that's fine. But yeah, I think regardless, it doesn't look like a bad position to me. The only thing I will say is I've been avoiding those pairs because of this. You know, when you zoom out and kind of look at that bigger picture, we're seeing some disgusting consolidation here, and it's something that I wouldn't be too fond of, but I think UJ is a great example of a long position. I see nothing wrong with that. I actually took this long position on UJ the week before. Nice winning trade. Right here. So same kind of position. You know, I was looking at that clear sweep on liquidity here, break a structure to the upside. We had a huge fair value gap right around the entry here, and then tap me in and made 3RR there. And you're simply just kind of following that new higher high and higher low that we formed. And then obviously the markets wanted to grab that, consider it liquidity. But yeah, it looks like a great trade to me regardless. So nothing that stands out there, if that's what you're kind of asking about. Any other trades that you guys took this week that you want me to check out, or even just, you know, just to share what trades you guys took? Because I did hear there was a ton of them that people had pending. Take just a quick breeze through some of these, just curious. Yeah, stuff like this, you know, I really would avoid this. I'm not going to be trading this till we see some new formulated ranges, and you can see how many scenarios of, you know, losses that can occur in a sideways market like this. Even the higher time frame, like this looks disgusting when you look at it from this perspective. AJB had a position, however, it seemed like I was a part of liquidity. Honestly, that position, I saw it in the main chat, looks fantastic to me. And I think one of the most important parts as a trader is to be able to trust your trading plan, where if you take losses, if you know, quote unquote, become liquidity, if structure forms differently, whatever it may be, being able to trust your plan is the most important part. Because I personally, as someone who's been trading profitably for, I don't even know, 4-5 years now, profitable, I would have taken that trade 100 times out of 100. It looks perfect to me. It's got a great break of structure, fair value gap right at the entry, bunch of liquidity before your entry too. Like, it looks picture perfect to me, honestly. So I would not stress that. And I think that's an important part of data collection too, and back testing, is you will see maybe this one lost, but in back testing, you might see 10 of these trades that win. And it's that idea of understanding the probability that, you know, at the end of the day, those picture perfect setups that everyone has too much belief in, they can still fail and they can still lose. And that's part of trading. But yeah, that trade looks great to me, honestly. I would have taken that if I was trading this week too. So I see nothing wrong with that. What is that? That's AUDJPY. Yeah, that trade looks perfect to me. I really see, especially, I love this liquidity that we have before the entry. But yeah, the low and the high here, break a structure, fair value gap right here. Everything looks great to me, especially that, you know, the new structural range we formed is a solid break of structure. So yeah, it looks good. I mean, I wouldn't be too hard on yourself over individual losses like that. I think that's a huge part of back testing, is kind of building that confidence and trust in the plan. Because I mean, I can go through my journal and, you know, any of these losses here, being perfectly okay with these types of scenarios where it's a great break of structure. I had a fair value gap at entry. You know, it's one of those things where the more I get comfortable with the plan and the setups, you know, I've seen setups like this win multitudes of times, so it doesn't really phase me or sway my decision making when I do have losses that occur like this. Especially something like this, just a clear break of structure. We have this bullish trend going on here, sweep on liquidity. In this case, you know, I could be considered liquidity in this scenario, but, you know, same idea. I just don't sway, don't let my psychology kind of falter on me. I just understand that I've had so many repetitions in backtesting and with this plan in general, that it doesn't really phase me. But I get a link to your journal to have a look at your trades. Let me, actually, I need to save it so it's the most up-to-date version. And then I should be able to send it over. All right. I just DM'd that. The only reason I DM it too, I get a lot of questions about my journal. And one thing to keep in mind, guys, I've been on 2 trips in 2 months. I get so many questions about, like, oh, you didn't take that many trades in this month, or how come you don't have a lot in this month? You know, you got to understand that I do try to trade around my lifestyle. If I'm going on a trip or something, I'm not the type of person to really bring my laptop and trade with me. So that's just, you know, just prefacing that. I get a lot of questions about, I'll get trades that are sent to me. For example, you could see I had a jump from April 1st all the way to the 22nd because of a trip. and I'll get trades within those weeks sent to me and people asking me why I didn't take them, etc. And just for ease, just to put it out there, I took a trip in between that. So that's why you'll see like missing trades in here, or if you're um I hate to use the word self-conscious, I guess, but obviously when people are learning, they're a little bit more conscious about if they're doing everything correctly. Don't let yourself get swayed or faltered by, oh, JB only took 8 trades this month. Like, what am I doing different? Or 7 trades, sorry. What am I doing different? Or am I doing something wrong? Just keep in mind, this is me trading around my lifestyle. So that's why there's minimal trades in certain scenarios or certain months and whatnot. Let's see. He said, I'm currently in this position. I think that looks great as well. I have seen so many trades. That's a big part too, is the pattern recognition standpoint. Like, I can look at that trade. I'll actually pull this over just so everybody can see. I've probably seen 50 trades just like this. It looks great to me. Obviously you're risk free on it already, so just kind of let it do its thing. But yeah, I think that's a big part of backtesting too, is that pattern recognition standpoint. I can look at this trade and within a second, in the back of my mind, I already understand, okay, this follows my plan. This is what I've done in backtesting. This is what I've taken in live markets that worked out well for me. So it's that kind of confidence and pattern recognition standpoint that regardless if this was a loss, if it was a win, if it was a break even, I kind of have in the back of my mind that, yes, I did the right thing. And I really think that's fundamentally all trading boils down to, is being able to execute a profitable trading plan. Like, we all know the strategy we use here is profitable. Just based on your personal backtesting, hopefully your personal backtesting, but even regardless of that, the amount of people funded with it, the amount of other backtesting you've seen from other members, but just understanding that, knowing the strategy is profitable, trading it and practicing it and backtesting to get yourself to a profitable level. And then from there, just fundamentally really trusting it and having that confidence in it. No liquidity sweep. Yeah, for me, if I'm in a trend, like, this is why people say the liquidity sweep's a tough role, because technically this consolidation is liquidity. We push out very aggressively and then break lower. Liquidity sweeps can be very discretionary. And I think the only advantage or disadvantage to that is, for me, if it's in a clear trend like this, a clear break of structure like you have, a great fair value gap, I can consider a little bit less of a liquidity sweep because we're seeing all of the other rules met and we're in a good trend. So I've taken plenty of trades like this, continuations, some people call them. But yeah, it's just something that getting used to, I guess, and getting those repetitions from backtesting is really the fundamental part of that. And yes, I will send over my trading journal. If I can, where am I going? Upload. All right. And then I just sent it over to you as well. You can take a look at it. Now, do you think in a trend like that, seems like something that is 100%? Yeah. So I think that's kind of the issue, is the discretionary aspect of the liquidity sweep rule. Liquidity sweeps are fundamentally happening on every time frame, everywhere. You can consider, for example, something like this, a very large scale sweep on liquidity, because there's a lot of liquidity at this low. But you can even consider something like this a sweep on liquidity, because we have this consolidation area and then that aggressive push out before the bullish move. It's tough to say, it's discretionary. And I think one of the main ways that I kind of limit that is, number one, focusing on trend. If you're taking those continuations and they have all the other rules met very clearly, I'm fine with it. But also, like I said, backtesting and repetitions, that's going to be the biggest one, because there is people, Suga's in this call right now. He sent a backtesting sheet of a ridiculous amount of trades last week. It builds him the confidence in a live market to know what he's doing is correct and from a data standpoint profitable. And I think that really is the key. Some people, they may trust their plan just because they're seeing others get funded around them. That's fine. But then there's other people who want to see for themselves and practice for themselves. Whatever gets you to that psychology or that mental standpoint of having full faith in what you're doing in the markets, that is how you will not only become profitable, but really excel as a trader. And of course, that's kind of what the community's for. You can ask these questions. You can, pick my brain. Do I like your trades? Do I not? But keep in mind that your longer term goal, whether it be a month, whether it be a few weeks, whether it be longer, just keep in mind your overall goal is to have full faith in your own decision making. And I do think that comes from stuff like backtesting, stuff like asking questions like you are and getting that confirmation in a call, hearing me look at your trades and say, I think it looks great. whatever it takes to kind of get to that mental standpoint, I think is huge. Yep, no problem. And let's see here. I will pull up currently around 50 trades. Once I'm over 100, you'll submit it. Yeah, perfect. So, and we always recommend 100 just to kind of circle back to that probability standpoint. Like I said, the trade you showed here, fantastic for me. It looks great. And getting out of the mindset of a lot of people look at a loss and they say, what could I have done better? 100 trades is kind of that arbitrary number where we believe after 100 trades, you might see 3 of these trades win and 2 of them lose. And you understand that you're profitable taking those setups. It's kind of the goal of it is just more repetitions. Because if someone takes one trade like this and they think completely out of probability context, they might sit here and say, oh, this trade didn't work and I did something wrong. As opposed to when you trade multiple of these setups, you'll kind of see over the long term that there is an edge and a profitable ratio or edge over the market, just mathematically speaking. And especially because, you know, one of these might lose. If you take another one and they win, it's not like 1-to-1 or 50%. You got to think of it as the one that won is 3 times as important as the one loss that you took. So that is another thing as well. Some people will say, oh, well, actually, I saw something recently. Someone mentioned that because if you have a 33% win rate, call it, you should do exactly the opposite of what you're trading and you'll be profitable, which is just so incorrect and not mathematically proper. If you have a 3 risk to reward and you have a 33% win rate, you are highly profitable. And I think that's the thing that some people misinterpret is they think, oh, if you have a 33% win rate, you could just flip it around and do exactly the opposite trade and you'll be 66% profitable. It's just completely incorrect. And it really boils back down to that probability standpoint. Had another question. Was wondering when it comes to FEG, do they need to be around the 75% or can it be anywhere? For me personally, it can be anywhere in the range. It is nice to see them right around that entry level. I think in a lot of cases, it's kind of like, you know, a little pat on the back for me. It doesn't change my decision making. But you know, if I see it right around that entry level, I'm like, oh yeah, it looks pretty solid to me. Like, because fundamentally we understand that fair value gaps and what they are, they need to be filled. And then once they're filled, there is some intentional reaction from them. But yeah, for me, it can be anywhere within the range of the low to the high. And preferably for me, I like to see it within this red zone here before the break of structure. But it really does not necessarily matter where in that range it is for me. I think regardless, you know, you can see them all over the place in some of my trades here. Small or large as well is a big one. I don't think there's really a size that I look for of a fair value gap as long as it's in there. You know, it's kind of a small one here. This is kind of a smaller one here. Also, it being filled or not, I don't really care if it's filled. These are just some common questions I get kind of building off of the one you asked. But yeah, I don't really care if they're filled. I don't care if they're around entry. And the reason being is just fundamentally speaking, the point of the fair value gap is to show volume. And this here, like for example, from this high to this low is a huge volume candle with a lot of momentum. And regardless of kind of the size of the fair value gap, if it was filled or not, where price is going, at the end of the day, this volume is still present in the bearish movement. So I'm perfectly fine with kind of whatever scenario with the fair value gap. Size of it doesn't matter, or positioning. All right, let's pull up. And obviously, if you guys have any more questions, yeah, no problem. Let me pull up, where was it? This data sheet here. So this is, like I mentioned, I still have your chat open on the left side here, so I'll keep up with chats. Now, keep in mind, I mentioned this is a person who's not in the community, so they're not a student of ours. It is just a sheet of data I got sent in DMs. I told them I could kind of go over it. So we'll take a look here now for our 1 to 3 back test. Okay, and what I do want to see here is some metrics. If I don't have metrics, I don't have much to go off of. So that is tough. And he's not in call to kind of pick his brain regarding that. And what I mean by metrics, let's go to all trades. Does this show? No. I'm wondering if there's a way, and if some of you know Notion a little better than me, you guys know I'm not the best with it. But, oh, here we go. Open. Oh, I can't see images either. So, oh, they're over here. Now, my one thing is I'd like to see some form of win rate without having to manually calculate it over 300 trades, because if I can't, um, I don't have much information here. I want to, and then, yeah, so there doesn't look like there's that. I just want to make sure I'm not missing that information, like if it's somewhere here that I'm not seeing, but it does not look like it for me. So I will take a look at some of the trades. Profitability wise, it does not look that bad. Some deeper losing streaks here. A lot of pairs we got going on. I'm not sure what the X's mean compared to the chart image. Weak break of structure, not clear at all. Swept high. So first thing I will get out of the way here. Number one, keep in mind I'm not working with any metrics, so this is kind of tough to make judgment calls. But I will say a lot of these notes columns, you'll notice I took mine out of my journal. I honestly lean more towards the side of no note taking. And the reason being is we talk a lot about that overcomplication here. We talk a lot about being discretionary and choosing A+ setups and how these aren't great things. And I do feel like notes columns or text columns like this actually lead people to be more on that overcomplication side. And the reason being is weak break of structure. Let's take a look here. Let's delete some of these images. And if you are going to mark something as a weak break of structure, maybe list why. And if you do list why, it should be something that's in your plan. So a good example of this is a candle close break of structure. So to me, if that's something in your plan, 4-hour candle close, then you have to be okay with seeing this loss occur and not going back and saying, well, it wasn't that strong, because that's where a lot of discretion comes into play. And if you've been trading for a long time, I think that's fine. I do think for people that are not profitable or don't have the best of win rate, I think it's a little better to lean on those mechanical rules until you get to a point. Because you can see we have another weak BOS here. And this is something where, I'm slightly agreeing, but I will say a lot of these that he's showing me are counter trend. We're seeing such a clear bearish trend here, and it looks like he's only focusing in on the reversals, which is also kind of a habit of the mind. There is people who kind of have this habit of thinking when a reversal occurs, that's like the best setup to jump in on because you can catch the market going the other way. Go with the flow, just try to follow the market and see what it's doing. Because if you take a weak break of structure against the trend, those two things combined, you're going to really hurt your win rate overall there. Not clear at all. So these are kind of the more discretionary topics I mentioned, where, it can kind of be, I'm wondering what these X's stand for. I'm not quite sure. But yeah, stuff like not clear at all. It's something a little more concrete would be nice. And I think, again, I would kind of agree with the weaker break of structure in a scenario like this. But in a live market, I took this trade. So, you know what I mean? It's one of those things where I, as someone who's been trading profitably with this strategy for a while, I took this trade in a live market. So the person who's a little bit too discretionary or too hard on themselves, for example, they might write something like not clear at all. Not really understanding that it does boil down to probability at the end of the day there. I'm going to hop back over here because I just want to, keep in mind, you guys have priority. So I'm going over someone who's outside of the community. Any questions, or even if one of you says, hey, I got my trading journal you want to take a look at, I'll hop right over and get to that. But he said, I have this pending. Do you think this is a weak break of structure? A little confused watching Sven. He had a candle close, and he could still consider it a weak break of structure. Sorry, I was stumbling over my words there. I think the only thing, it almost goes hand in hand with what I said before. We're kind of seeing like a bearish trend here. So for someone in Sven's scenario where I mentioned, a little more discretion is fine. He's been trading for a long time too. I think it's perfectly valid, but I think this trade you have here is great. There's nothing that I would really hold against this. But kind of what I mentioned before, if you're following that trend overall, it may be more habitual to kind of focus on the bearish setups because counter trend is typically lower probability, but I don't think it's an issue at all. I love the consolidation here. I love the sweep and the break that we have in the fair value gap. So this is perfectly fine for me as a trade. I would take this exact setup. I don't really see a problem with it. But that being said, it's, it kind of comes back to that confidence in your own edge. I think this is a great trade and I would take it. Sven may not. And I think at the end of the day, that's kind of what boils down to making traders profitable, is everybody having their individual confidence in their own trading. I'm confident in the way I trade. Sven's confident in the way he trades. And, I don't sit here and go, well, Sven's not taking it, so I won't. You know what I mean? And I'm sure Sven's not sitting there going, well, JB's taking it, so maybe I should. It's kind of that understanding that everybody has their preferences and trades their own way, even using the same strategy, but overall everyone can be profitable. And it's kind of, you know, a niche thing to understand as a trader. But keep in mind that trading is such a game of, I guess, I don't know what you want to call it, mass repetitions, or a longer term type of standpoint where you're going to see stuff accumulate in the longer term, that these one-off scenarios, I've taken bad trades in my journal. I've even, you know, pointed some out that I said I don't think were the best trades. I believe this being one. For myself, typically I use the overall high and low. This one I was a little bit more aggressive than I typically am and took a loss. Do I really care? Do I, you know, beat myself up over it? No, because I understand that, yeah, I took a shitty trade here, but over the long term, I'm profitable because I focus in on the plan and what I'm comfortable with, and kind of just getting to that standpoint, I guess, where everybody takes bad losses, everybody can take weird trades here and there, everybody can sit out of trades here and there, but it's that long-term perspective of wins and losses accumulating that really creates profitability. So I would not be worried about this. I think it's a great trade. Could you clarify overall high and low? Yes. Let me pull that trade back up here. So for me, typically, when we're seeing highs and lows formed, actually, you know what? Let me pull it up on a live chart here. Is that, no, this is not, what trade was this one? CAD JPY. Right here. So, this is kind of what I actually drew this out, I think, in the last webinar, but this is a trade that I would typically prefer only because what we're seeing here is these overall swing highs and lows. So we have the higher high, higher low. When the break of structure occurs here, I go for a long with the stop loss at the low. The break of structure occurs here, I go for another long with the stop loss at the low. And you can see I use this low in that scenario as opposed to the overall. It's something that I'm typically more comfortable with, is just focusing on these kind of swing ranges like this. But do I think that trade I took was wrong? No. I just kind of understand that it's part of a longer term probability. I'm going to fuck up. I'm going to take bad trades. I'm human too. And I think that's kind of the advantage of having that overall unbreakable confidence in your trading plan, is like, I can take some shitty trades in a losing streak even, and then still see over the long run that profitability come into play. So I guess fundamentally what I'm kind of saying is, don't be too caught up on one trade scenario. For example, people in chat will say, what do you think about Euro JPY? This is just a random pair thrown out there, but some people will be like, what do you think about Euro JPY? And I think fundamentally being able to kind of leave behind that one-off trade scenario where, was this trade good or bad? And it should be something more over, let's call it 50 trades. You can look at yourself and say, okay, what can I improve over these 50 trades that would increase my win rate, for example? And a lot of times it's really nothing too significant, because I can have this trade, for example, you know, let's just call, well, we kind of talked about this one a lot, but I could have this exact trade win 3 times and have it lose 1 time. And if someone says, well, I shouldn't take trades like AUD JPY because it lost, it prevents them from taking those winners in the future. And it's that kind of unwavering mental aspect of things that really, really is important. All right, take some more looks here at this data. Wait, what did it say? Swept high going other way. Swept high going other way. I'm not really quite sure. Okay, so he's saying that it swept this liquidity high here. Now, this kind of goes into what I talked about being a little bit more discretionary. I think I took this trade live as well, if I do remember correctly. Euro US dollar on the 4 hour. I feel like I took this trade live as well. But it's one of those things where, you know, kind of what we just talked about regarding that other trade. Some person might see this scenario, lose, and then mentally tell themselves, and especially even with a little note, I shouldn't take these trades anymore because they're bad. Disregarding kind of what I said before, this trade could win many, many times. I've seen it win many, many times, where we have a sweep, break a structure, we're following that higher time frame bullish trend. This is a great scenario and great setup for me. And I think mentally putting yourself at that disadvantage by using a notes column, it trains your brain to not think in probabilities, and it trains your brain to think in those one-off trade scenarios like we talked about. So he's kind of training his brain to go, okay, well, this was a bad trade in this scenario, so I shouldn't take stuff like this in the future, as opposed to taking, call it 100 backtested trades. You might see that similar setup pop up 10 times, and the other 9 could win, for example, but that one trade where you wrote the note and where you said it was a bad trade and shouldn't take it, it's almost more significant in the back of your mind than the winning trades that follow. Saved by 0.71. We'll take a look at what he means by that. Saved by 0.7. So I'm assuming 0.71 is referring to the fib level. And I'm assuming, I'm just going to take a guess here. What he means is it tapped into the 0.71, would have been a break even. And then the 0.75 is the one that lost. Once again, it's kind of going a little too in depth. I think a big piece is have your plan and stick to it, because I find when people have a gray area in their trading plan, that is where they're going to struggle the most. And it's for those traders that, for example, they might not be able to mentally decide, do I want to use the 0.71? Do I want to use the 0.75? They might think, do I want to use break even or do I not? Those traders that find themselves in that gray area are going to do worse than the trader who says, you know what, screw it. I want to use a break even because I'm more comfortable, and I want to use a 0.75 because I've done that more. As simple as that, that trader that makes that concrete decision is going to be more comfortable and confident in their trading plan on the longer term. And it really cycles back a little bit repetitive, but to that confidence I talked about, not being swayed or not being confused by any trading decisions you make. So I do want to look at a couple winners here. This one's a great trade. I had the same exact one on my live account, actually. For me, it actually broke even, but I had 2 trades that were just like this on my live account. There was Euro US dollar, which looked like this. Or actually, sorry, this one might have been the winner. And then pound US dollar, which was a very similar trade, was break even. I'll check it out here. For some reason, I feel like it was this one. This is just a crazy guess, but no, it was not. Let's see here. Pound US dollar. Actually, could have been. Oh, there it is. Kind of sniped that one. So this is the exact trade we're kind of looking at here that he took. You can see this is the sweep on liquidity, the break of structure. This was, I think, one of my first winners of the trading year. But yeah, same trade. So I took the winner on this one, and then pound US dollar was a break-even setup. I took almost identical. But once again, just kind of that repetition. And I think pattern recognition, like I mentioned, is a big one. Me being able to just simply look at a trade that's drawn very differently than my own, doesn't have any other metrics, just has a fib, and being able in the back of my mind to say, oh yeah, that pattern looks exactly like the pattern that I saw myself back in January. It's that kind of pattern recognition that the more you trade, the more you get comfortable with one trading plan and don't switch from it, you'll be able to kind of really see different scenarios and see what works best and worst for you. Take a look at some more of these here. So he does use break even. Maybe it's a different metric. No, I don't think so, actually. I think, yeah, so he does use break even and he logs whether or not it's a loss or win. Unclear what's going on. We'll take a look at this one. I think that's perfectly valid. I would agree with this. So he mentions unclear. I'm sure it's because of this consolidation. And, you guys kind of heard me talk about this at the beginning. I always try to avoid these types of situations. If I'm unclear of what the market's doing on a higher time frame or the goal, I will, 1, default to the overall higher time frame, which we could see is super bullish here. We have this huge up run, consolidate, and then kind of expect that bullish push because we were bullish previously. I don't typically like to do that, but for the scenario where I see a great setup, sure. But when it's consolidating perfectly sideways like this, I always try to avoid it because these are the ones that are going to get you, these losses that I don't deem too necessary. So I would agree with that one. He mentions aggressive but valid. I would agree with this one as well. Definitely aggressive, but I like the bullish trend here. I like the fair value gap and the break. It's a bit more of an aggressive scenario, but these are the ones that you could see he missed that bull move by maybe 2 pips. Very small, minor. So yeah, I wouldn't be too hard on yourself over that. I think it's a great loss. Last. I don't know what last. Check this out. That's a great trade. I like the sweep on liquidity. I like the break of structure here. For some reason, I think I might have taken this on my live account as well. But yeah, great loss there. Nothing I would say that stands out. Let's take a look at some more winners. My computer's being oddly slow. I mean, it was off for a whole week, so that's probably why. Yeah, this is a great winner. Do you tend to take aggressive trades yourself, or do you prefer the ones with larger ranges? I honestly am kind of in a gray area. I take aggressive trades when I hop on and see them. I think my biggest difference compared to some others, because I get asked this question a lot, I've taken some very short and aggressive trades. I don't know if I could find any specifically, but um, in my journal. But the difference for me is I hop on once a day at 8 a.m. There's some people who hop on kind of 1 to 2 times a day. They're a little bit more active on the charts than I am, so um, they might hop on and see certain setups forming quicker than I do. Like for example, this is a sweep on liquidity. It's a break of structure. Well, let's just pretend it was a little bit stronger here. There's no candle close, and then a fair value gap. Some people might hop on and see this and set that order. For me, hopping on only once per day, I tend to miss a lot of these. So not necessarily that I'm sitting out of them, but it's kind of a time perspective that I'm missing a lot of them, because if you consider this candle here, the break of structure, that was at 5 a.m. my time. And by the time we got tapped into the trade, we're looking at 9 a.m. my time or even less. So I would have to be on that chart within that little window of time to have this trade follow all my rules with the break and the sweep and whatnot. So that's the reason I find myself missing more of these aggressive ones than taking them. But yeah, I mean, I don't fear any type of aggressive setups. I don't mind taking them. It's just kind of that scenario when if they occur and I'm on the charts, then I set them. Let's see here. We'll take a look at another winner. This one also a good trade. So he does tend to lean on the side of those higher time frame or larger ranges, it seems like, which is perfectly fine. You can see they're working very well for him here. But yeah, great entry at the 75%. Sweep on liquidity. Break of structure is a little bit weaker here, but you know, it's fine if he was confident in taking it. Let's see. He kind of laid off the notes, which I do kind of like, because you guys mentioned, I mentioned earlier to you guys that I don't really like taking notes like this too much. I think it is a little bit too discretionary in some cases. But yeah, you can see he's got some aggressive trades mixed in here. Now, one last thing I'll kind of touch upon before I wrap it up here, because you know it's already 12:45, but keeping in mind that he actually came to me and he mentioned that his live trading was very different than his backtesting. So I mentioned I don't have metrics here. It would be nice if I could, so I could kind of give a better conclusion, I guess, because I will mention if he tells me backtesting is profitable and he has a 27% win rate just on that line, I might go a little bit into more detail of the backtesting. But because I don't really have those metrics, I can't really do the math right now of counting wins and losses. I'm going to assume it's just profitable testing, and his issue is transferring that to a live account, which is a common problem. So nothing to be scared about there. But one thing I will mention, number one is discretion, really making sure that you're taking the exact kinds of setups that you took in backtesting and not allowing yourself to kind of falter or have that lack in confidence I talked about. A lot of people, they might backtest 300 trades and, you know, they have 300 different scenarios with one trading plan, but when it comes to a live market, they kind of fall off of that plan because one, they're afraid of some of these losing streaks when they come around live, which is a tough one. This is a rough, I mean, including this is a rough losing streak, but I also want to mention this is kind of part of a learning curve. This is his first trade. And so his first bunch of trades were a lot of losses because he's still getting used to the plan and practicing. And then as we scroll deeper, we're seeing more and more win streaks down the bottom here because he's getting more comfortable in learning the plan a little bit more. Completely normal. So I wouldn't be too hard on yourself about that. This here's a perfectly valid losing streak. My largest losing streak, not including break even, so because it's kind of a different scenario. For this year, I believe is 4 in a row. I'm actually technically on pretty heavy one right now. 3 in a row here. I know I had a deeper one. Yeah, 4 in a row a little later last year. So kind of like 4 and 3 in a row, and that's not including break even. So that means like if I take 3 losses and then 3 break evens and then 3 losses, I'm counting that as like a 6 trade losing streak, quote unquote, even though, you know, technically these trades in between are not. But yeah, it's perfectly plausible. And I think for those that are trading a lot more aggressive with firms, even larger is probably expected. I think 5 trade losing streaks, 6 trade losing streaks, the more aggressive and more repetitions you take, the larger the losing streak. But keep in mind, that also typically means for people they're going to make more profit in the longer term. How do you graph that equity curve? So I typically actually do it it's funny, in a lot of webinars, I'll kind of show people how to do it, but it depends on, you need to have a climbing metric in your journal, which is something like this. So this is the original account value. I took some money out at the end of 2024. So that's actually not even correct. I think I was showing a 200K example for like a funded challenge, but I basically took some capital out at the end of 2024, brought it down to this, and then kind of climbed from there. And that's what I mean by a climbing metric, is something that's showing like that progression of an account, or like a progression of total risk to reward, for example, but a metric that kind of climbs, and then highlighting it, insert, and then you go right here to a line graph. So I'll actually show you a new one. So I would take this metric here, let's just highlight it down, insert, and then you go to a line graph here, this one here, the 2D line, and then you adjust your scale accordingly. So you double tap it there, you can click, I don't think you can click auto, but we know we started at 125,000. There you go. So, and then you can kind of adjust it and change it how you want. If you want to include dates, you just highlight both columns instead of just the one. But yeah, that's kind of how you set it up. And I just like it because I think it helps, number one, showing the progression, which I think is super important. Like, I'm on a deeper losing streak right now, a lot of trades in a row with no profit. But I think it's important because we're kind of seeing like this dip in the equity curve. And for some people, it's better to kind of, I think for everybody, it's better to take a step back and look at where you started and understand that this is so insignificant to how far you've come in profit over the course of a year, that it doesn't get to them as much as it may if they're just kind of focusing on one-off scenarios. That's why journaling is so important, is being able to take that big step back and look at the overall, because people really do struggle with that. People are on a losing streak in the last, call it, what is this, 2 weeks? And, you know, I'm 2 weeks right now without a winning profitable trade. Mind you, I went on vacation, so I guess it doesn't count that much. But for some people, if they're 2 weeks without a winning trade, it weighs on them very heavily. And I think the people that don't journal are more susceptible to psychological mistakes compared to the person who does journal. They can say, well, you know what? I lost 3 in a row, but I just had the biggest, most profitable win streak of the year. Right before that, literally the week before that, was a massive profitable spike in my equity curve. So I don't falter. I don't lose confidence. I keep trading because I understand this is just a little hiccup compared to the profitability I've achieved throughout the year. I think it's important too. I see some people in chat. I mentioned it yesterday. Someone in chat was upset because they're down a lot on the year. And you know, sometimes, I don't want to disregard anybody from a data standpoint, but sometimes people will say I'm down so heavily from the year, like let's call it negative 10%. But then they kind of realize if they're not tracking a journal as much as they should be, they don't have the data to prove it in a live market. They might look back and realize, you know, hey, I actually got funded 2 weeks ago, or that same person who was upset about being down on the year got funded 2 weeks ago. And I think it's important to kind of keep yourself mentally accountable, because it is so easy if you don't journal to kind of go with the ups and downs of trading. Like, I take this 3-win streak and I feel like I'm on top of the world and I'm the best trader ever. And then it makes it so much harder to withstand a losing streak right after that, because my brain's telling me, oh, I figured out the secret. I mastered the trading plan. I won 3 in a row. And then the next week I'm on that losing streak, as opposed to a trader who's comfortable with that, the sways and how trading works. Trading's very volatile. You're going to have so many ups and downs, but the goal is that overall slow and consistent growth, kind of like what we're seeing here. And, you know, I think a journal holds you mentally accountable, if anything. So maybe I will wrap it up here. It's a little bit early, but like I talked about, I don't want to drag this on too long. I don't have many trades to show you guys. I did not really trade the last month. I will actually be closing out this month on my journal right here, and then pick up tomorrow, starting with June, which is ridiculous. We're halfway through the year. But yeah, I will pick that up tomorrow. As you guys know, this is recorded and posted, so within 5 to 10 minutes, I usually have it posted in live sessions. But any questions before I wrap it up here? Losing my voice a little bit. I haven't talked like this in a while. Is that live journal the same one? It's different. honestly, my live journal, I kind of made it myself because I just think it's a little bit simpler. Back testing, I honestly prefer the other one that we show because I think it has a lot more metrics, which is kind of important for back testing to see a lot more data and metrics. My live journals is something simple that I can maintain. Because one thing I did find, if I had a journal, I've, like I said, I've been trading a long time. I used to have journals that would have 20 different things that I would have to enter in. And I found myself personally, I would be less accountable. I would get lazy with it kind of and, not keep up with it. So I find a journal that's as simple as can be, just very few metrics to type in, helps me be a little more consistent. That's all. Let me see here. I might be able to send the file. I think it's this one. Not 100%. Let me open it and see. Yep. Yeah, this is it. I'm the same. When there's too much, I get lazy. Yeah, I do think it's, it's kind of a personality thing for me. I would always find myself kind of just getting lazy with my journal, not keeping up with it as much. So I kind of limited the amount of factors I have to put in. But I do think from a backtesting standpoint, more metrics is better. But yeah, if there's no other questions, I will end the recording here and kind of get this posted. Yeah, no problem, guys. All right. I'll see y'all next week. Enjoy the weekend too. Bye.